In chapter number 4, you will learn about concept of trend and trend line. Type of trend. We have a three type of trend. The first one we call uptrend, second one we call sideways, and the third one we call downtrend. This is uptrend, a sideways, and downtrend. There are three types of trend in the market. Trend occur when there is an imbalance in supply and demand. Whenever a trend change occur, there is a formation on the candle known as a swing point, pivot point, reversal formation. If you can see, this is an uptrend when the market going up. This is sideways when the market still in the not going up, not going down in the same way. And this is a downtrend when the market is going down. Okay, we look about the uptrend. What they said about uptrend. If we refer to the book Technical of the Financial Market by John Murphy, he defined an uptrend as an uptrend is a series of successively higher peak and trough. Uptrend is a series of higher peak and higher trough. This is higher peak, same higher high, higher trough, same higher low. How many higher high and how many higher low? Minimum 2 higher high and minimum 2 higher low. So we see at the graph, this graph, you can see they are make a new high first and they are retrace, they are doing the higher low, and then they are going up, they are making higher high, and then going down, they are making higher low, and start making higher high and higher low, and lastly higher high. So this is what we call is uptrend. Why? Because they are make more than 2 higher high and make more than 2 higher low. Higher high number 1, higher high number 2, and higher high number 3. Higher low number 1, higher low number 2, and higher low number 3. The conclusion is, when you want to know, is it uptrend? See, minimum they have a 2 higher high and minimum they have a 2 higher low. This is a key point. Okay, remember that. Okay, the second trend is a downtrend. What they have said about the downtrend. If we refer to the book Technical of the Financial Market by John Murphy, he defined a downtrend as a downtrend is series of declining peak and trough. The downtrend is a series of lower peak and lower trough. Lower peak same as the lower high and lower trough same as the lower low. How many lower high and how many lower low? Minimum we need 2 lower high and minimum we need 2 lower low. Okay, see at this graph. This is downtrend. Why we call downtrend? Because you see, they make a low and they make a lower high first, make a lower low, and they make a lower high, and then lower low, and then lower high, and then lastly is lower low. So, how we identify there is a downtrend? Because they make more than 2 lower high, and then they make more than 2 lower low. This is a lower high number 1, lower high number 2, lower high number 3. And this is a lower low number 1, lower low number 2, and lower low number 3. So the key point is, when you want to identify, is it the downtrend? Minimum 2 lower high and minimum 2 lower low. This is a key point. Remember that. Trend number 3 is a sideways or trendless. If we refer to the book Technical Analysis of the Financial Market by John Murphy, he defined a sideways trendless as horizontal peak and trough will identify a sideways price trend. Horizontal peak and a valley are characteristic of price trend that move sideways trendless evenly. Okay, this is a low, it's a high, low, and high and low. This is a sideways. Okay, in this topic, we discuss about the trend lines. What is a trend lines? Ever heard the trend is your friend? So don't be hostile to trend. Make friend and follow that trend. A trend line is a method used to identify directional trend and various types of trend changes. Trend line also serve as a support uptrend and resistance for downtrend. So if you can see in these pictures, when the market is uptrend, so we're using the trend line as a support. If the price is not break this trend line, so it can be the market is still going up. But when they are cross this trend line, must be careful because maybe they want to change the direction of the trend. Okay, for the downtrend, it's the same. When the market is not cross to the resistance, it can be still the market is downtrend. But when they are cross, must be careful. Maybe the market want to change direction. Uptrend line. Uptrend line is a way used to identify the direction of a trend and notify when a trend changes. Uptrend line also act as support. The uptrend line is built below the price by connecting at least 2 points, starting from the lowest low point to the highest low point. Okay, if you can see in this area, this graph show the uptrend condition. Like I'm saying before, at least 2 points must be touched, and we start from the lowest, and second point is the highest low. We just pulling from the lowest and touching to the second highest low, at least 2 points. So what the function of this trend line? Function as the support. So the price, if the price is not break, it's still valid. I mean the price is still valid for the uptrend. But when the price start cross or break this trend line, be careful because maybe the trend is end up or the trend start to change from the uptrend. It can be start to change the downtrend. Okay, this is a downtrend line. The downtrend line is a method used to identify the direction of a trend and notify when a trend changes. The downtrend line also acts as a resistance. The downtrend line is built on the price by connecting at least 2 points, starting from the highest point to the lowest high point. So if you see this graph that show the downtrend right now, so this trend line, like I'm saying, 2 points at least must be touching, start from the highest, and the second point is the lowest, highest. And we call this is the bearish trend line. So what function of the bearish trend line? The function is it become the resistance. Okay, if the market is not cross this trend line, that means they are still valid on the downtrend. But when the market start cross or break this trend line, you must be careful because maybe the market start to change direction from the downtrend to the uptrend. So must be careful when the market start touch and start cross this trend line, because this trend line is your resistance. Remember, this trend line is your resistance. Okay, this is an example for the market uptrend. So we're using the uptrend trend line. So right now I'm choosing the gold chart and I'm using the 4 hours time frame. So this is a 4 hour time frame. You can choose which one time frame you need, but I'm choosing the 4 hours. So for the first one, we need to identify, is it the market is uptrend, downtrend, sideways? And then we know how to using the trend line. Key point is we start from the lowest, and the trend line must be touched at the second point. That one is the highest low. So they're touching, and then this is our trend line. The function of trend line is become our support. So monitor your support. When the pricing is nearest or start cross or break this our support, make sure be careful because market want to change direction. But right now you can see in this area it just touched our support or our trend line and they are rebound. You can see they're doing at this one the first time, and this second, and this third. So the lastly, when you can see at this area the market is start, okay, I'm zoom in, the market start cross and then they are close the price below the trend line, below our support. So that is a sign you must be careful. And then you must see the next candle. The next candle, they are open below than our trend line. They are start closing below than our support. This is the sign that the market want to change direction, or they are doing the reversal from the uptrend and become the downtrend. So you can see the next candle, same. They are close, they are close below than our trend line. You can see they start change the market from the uptrend become the sideways. This is a sideways right now. Okay, this is an example that our support was break at this area, and then the price are falling down. After the price are falling down, they are doing the sideways. So must be careful at this area. Okay guys, this is the gold chart and I'm using the weekly chart. You can choose which one time frame you need. So I'm choosing the 1 week. So right now we want to see the downtrend. The downtrend line. So I'm just choosing the trend line and start pulling from the high and touching the second lower high. Okay, remember that I'm saying must be at least 2 point. Okay, this trend line, they become as our resistance. Be careful if the market start cross and close more than this trend line. So you can see this at this area, the market is going up and start break this trend line, our resistance, and they are close in this area. But after that, the market still going down. They start doing the downtrend again, and you can see a lot of the pricing start to touching or try to break this area. This resistance. So be careful. If you can see in this area, just start reversal from the downtrend, and then they are close in this area. Okay, we're using the Trading View platform. Right now, I'm looking at the gold. This is a gold chart, and I'm using the 4 hours time frame. If you can see, right now, market doing the sideways for the gold. Let me marking for you. Okay, this area is a sideways already right now. So market doing the sideways right now for the gold. We just waiting. Is it the markets going up or markets are going down?